Hello and welcome. We are in conversation with Sanjay Sachdeva, the chairman of Zyfin Holdings, which is an asset management and advisory firm based out of Singapore, focused on emerging market exchange traded funds. And today we are here to talk about their newly launched fund, which is the LAM Zyfin MSCI India UCITS ETF. Now, this exchange traded fund will track the MSCI India 10/40 index and is listed on the London Stock Exchange and Germany's Deutsche Borse. Hi Sanjay, very nice to have you here with us.
Hello.
Sanjay, I've given a brief introduction of your exchange traded fund, but can you tell us a little more about it?
Well, basically, the MSCI India is probably followed by almost 98% of all global investors as a benchmark who invest in India. And the MSCI India until now in Europe specifically has not been available on a physically backed basis because it is structured as a synthetic swap derivative product. And to make it easier for global investors to access India, we've launched the MSCI India on a physically backed basis. And this creates a whole new world of opportunity for global investors, especially institutions who have a mandate that they cannot invest in derivatives or structured products.
Okay, Sanjay, I just had a question. Why the MSCI India index is something that you all chose to use to track and not really any index on the National Stock Exchange or Bombay Stock Exchange?
Well, there is no comparison as far as the MSCI India is concerned because global investors, almost 98%, as I mentioned to you, use only MSCI India as the benchmark to track India. So, from a global investor perspective, and our audience is the global investor, so that's why we chose with the MSCI India.
Okay, Sanjay, what is your view on emerging markets and especially India, because that's what your fund tracks?
Well, the current trend is that emerging markets are not that attractive because, unfortunately, emerging markets as a basket include Brazil and Russia and South Africa. And most global investors, based on our interaction with them, would prefer to access directly to India rather than to a basket of emerging markets, which includes Russia and Brazil. So which is why India is seen as a much more attractive investment destination comparatively, which is why we felt that the MSCI India covers that aspect.
Okay, just wanted to understand with respect to the timing, why the fund launch right now? What is the rationale in launching this fund, and what are the kind of opportunities that you're seeing in England and Germany?
Well, see, the MSCI India in Europe is almost a $3 billion category. There are $3 billion already associated with it. Globally, there is more than $16 billion in the MSCI India product in the fund. So clearly, there are lots of opportunities for global investors to access the MSCI India much more easily. And from that perspective, we thought that there's no better time than as soon as we got the regulatory approvals through, we decided to launch it.
Okay, and what sort of investors are you expecting to participate here? Again, will it be more on the retail side or institutional? Any number that you can put in terms of the traction that you're expecting to see?
Well, the whole purpose of an ETF really is to allow a small investor who could be a doctor sitting in Manchester or in Glasgow who wants to put £100 or even £200 to invest in, take exposure to India, to be able to have that ease of access. However, ETFs are used as asset allocation tools very, very, appropriately by global investors as far as institutions are concerned, and also family offices and wealth management companies. So really, it's a across the board tool. And it is part of an asset allocation plan for a investment plan.
Okay, so what if the response that you receive is good? I mean, what next?
Well, we have a whole bunch of different products that we are planning to launch in the near term. So you just gotta wait and watch for that.
Okay, one more question that I had on the fund. What is the strategy with respect to the fund, being able to meet all the fund meet or beat the MSCI index that you're tracking after accounting for the fees and expenses? What is the strategy of the fund?
Well, see, today, if you invest in a mutual fund, as far as India is concerned, you will end up paying 5 and 6% fees, because if you include churn ratios and all that stuff, trading inside the fund, because you're giving discretion to a fund manager. On the other hand, if you invest in a rule-based product, like the existing MSCI India swap products, you will end up paying 3 to 4%. And in our fund, our total costs are less than 1%. So the cost is a very big factor in why our fund is much more well positioned comparatively.
Okay, thank you very much for talking to us, Sanjay. One more option for global investors to really play on India as an emerging market, and thank you all for watching Bloomberg Quint.